There you go.
Okay, so let's call the meeting to order at 8:34. This is the Operation Oswego County Audit Committee meeting. Austin, would you do the list of participants?
Sure. A roll call of attendees. So audit committee members here in person are Pete Cullinan, the chair, and Ed Gilson. And those joining us remotely on screen are Ron Tascarella, Rick Weber, Ellen Holst. We also have guests, Brianna Lane from Grossman St. Amour, staff in attendance, Austin Wheelock, Executive Director, Kevin LaMontagne, Nate Emmons, and Aaron Hurwitz. I believe I left anybody off. I believe, Jamie Galante from Grossman is also joining us right now.
Hi.
Good morning.
Hi, Jamie.
I'm so sorry. My computer is blue and I just joined from my phone. I don't know what's going on with it, but I didn't want to keep you guys waiting.
Thanks for being here.
We're good. We're just started.
Just open the meeting.
And going through the agenda, notice of meeting was posted February 27th in the Pal Times. So that's good. So ladies, it's all yours for the audit.
Great. Are you able to share the presentation?
Yes.
Okay.
Can everybody see it?
Yep.
Yes, perfect. So sorry for the abrupt entrance, everybody. My name is Jamie Galante. I see some familiar faces, but just in case there are any new faces, again, my name is Jamie. I'm the partner on the engagement with Grossman St. Amour, and I'm here virtually with Bree Lane. We've been working on this engagement for a number of years together, so we're very familiar with working with Austin, Kevin, and the team, and we're going to present our OOC and OOC Foundation results today. So as I mentioned, we're going to go through just some of the highlights for this year's audit. We do have some required communications. It's pretty standard boilerplate language, just discussing sort of the responsibilities of the audit, our independence, findings that we may have had. And then we will go through some of the financial information, the audit report, the compliance aspect of the audit, as well as any internal control matters or observations that we had this year.
So just some highlights that happened this year. Operation Oswego County had a net income of about $367,000. That was really mainly attributed to that sale of your BEC building and the gain on sale of land. There was some other fluctuations, but the biggest factor in that, there was about $80,000 left on the books, net book value of that building. So that's where the slightly lower gain on sale of land versus the actual cash that came in, that was that net book value that was still left, as well as about $8,000 of closing costs for that sale. You also spent about $120,000 on office renovations, and you'll see that if you see footnote 4, there's the table that breaks out what is in your property on the balance sheet of your books. That's considered CIP right now, construction in progress, because it was not completed until 2026. So at the end of 2025, not yet being depreciated. And then you'll also see a revenue on your income statement of about $75,000 from the IDA. That was their share of them helping contribute to the office renovations, considering it's a shared space. Operation Oswego County Foundation had a net income of about $7,000, and that there was actually a loss in 2024 of about $2,000. So that favorable change was really attributed to a bigger push in that fund drive. You can see that our next point is that it generated approximately $27,000. That increased about $15,000 from last year, and definitely goes to show, Austin was showing up in person and asking people, and I think there was just a lot bigger of an emphasis placed on that this year. So a favorable position there.
Okay. So as I mentioned, we have required communication. So if you've been on the board before, excuse me, you said on other boards. You may have heard some of this language before. So we're required to discuss responsibilities for the audit. So a lot of this is laid out in the engagement letter that you receive and sign at the beginning of the engagement, as well as in our audit opinion and the draft financials that you have. So our responsibility is to execute an opinion or issue an opinion on the audit. And the financial statements are management's responsibility with your oversight as the board. So our opinion this year for the audit is an unmodified, clean opinion. That is best case scenario. That's what you want to hear. And then any significant matters that we may have had didn't rise to any level that would impact the audit opinion. So that's important. That means everything's operating as it should be. So in terms of our scope and timing, that was consistent with our engagement letter and the planning that we laid out to you. So Austin, Kevin, Karen, everyone is fantastic to work with. We truly appreciate the emphasis on getting everything to us timely, making sure any stray requests that we may have after we leave the field are answered, following up on confirmations. It truly is appreciated to help us get this to completion as quickly and efficiently as possible from a time perspective. And we certainly know how much, we may ask for or requests that we may have, including, following up on confirmations that weren't answered multiple times. So we understand the time that it takes your team to prepare that, and we didn't have any delays, any issues obtaining information. So that's really important and speaks to how great everything is working. In terms of the audit itself, we are required to be independent as your auditors. So what that means is, we can't have undue influence on the books and records, and we have to make sure, because we do prepare the financial statements, that we have necessary safeguards in place to make sure that, we maintain that independence. So how we do that is we have an independent secondary review of the financial statements that's done by an audit manager or partner in our practice that's not associated with the engagement. So if you've been on the board for a while, you may remember Christina Andreyko. She was the previous partner on this. So she has a lot of historical knowledge. So she actually serves as a technical reviewer on this as a secondary review to make sure that we have that safeguard in place. In terms of other non-attest services, so non-audit services, we also perform the preparation of both the 990 for the OOC and the foundation. And we don't have any to put in any safeguards because those are separate from the audit itself. In terms of significant risks, this bullet is a bit of a misnomer in the sense that I think it sticks out as a red flag when you look at it that, oh no, we have management override, we have risk of improper revenue recognition. So these aren't specific to the organization. These significant risks are inherent in almost every audit. These are what auditors plan their audit risk around. So when we sit down and we plan our audit procedures and our risk assessment of how we're going to evaluate financial statements, we plan our audit around the risk that there could be management override present. Especially in organizations of smaller sizes, we see that, and risk of improper revenue recognition is also inherent. It's sort of inherent in the nature of, is revenue in the right period? Was it cut off appropriately? Was it recorded in the right buckets? And that's why we send confirmations and we look at our procedures. So the important thing to note here is we didn't find any additional significant risks that we would have to incorporate into our audit. So that's good news as well. If we move to the next slide. So our qualitative aspects of our accounting practices. So in the draft financial statements themselves, note 1 is the organization's significant accounting policies. It goes on for a number of pages. So that's standard practice in an audit. And there's nothing unusual about those policies. Those are standard. There's nothing unique that we would have to bring to your attention. There's no new pronouncements this year. We will see a new pronouncement next year over the MD&A that we'll talk about a little bit later. In terms of your financial statements, they do contain significant estimates. So those are estimates that management has evaluated that help us create the financial statement balances. So the first is revenue recognition that we talked about on the previous slide. So you have a number of loan receivables and management estimates the collectability of those loans receivables. So this allocation is done by Kevin by reviewing the balances and determining, based on specific circumstances, what the likelihood of collection is. And we review that as a part of the audit. And the second one is the functional expense allocation. So the financial statements themselves include a classification between program expenses or directly related to the programs that you provide, or management in general. So that's more of your overhead and your administration. So again, those are allocated, based on percentages if they can't be specifically directly allocated. So for example, depreciation is allocated by building. So the buildings that are, used for rental or other operations versus your office building for overhead, et cetera. Otherwise, it's usually a percentage that's again based on management's estimate. So those are consistent with past years. There's nothing new to bring to your attention there. As I mentioned, we didn't have any unusual transactions or any significant difficulties of obtaining information. And believe it or not, it does actually happen where it is really hard to get information to get to the finish line. So this is really an incredibly smooth audit process, and we do appreciate that. We didn't have any adjustments that management did not make. We had a couple of small adjustments that I'll go through. So the first says roll OOC net position forward. So what that means is at the end of the year last year, the net position or the fund balance of the organization should agree to the beginning balance this year. So in cleaning up some old items, I think a check was voided that was related to a previous year. And by voiding that transaction in QuickBooks, it actually altered the ending net position. So we had to make an adjustment to make sure we started from the same point that we ended last year. So that, I believe, is a transactional situation in QuickBooks that now we know, if we void, how it may affect past periods and how to correct that going forward. So I wouldn't expect to see that. It was also a really small amount. It's just something that we wouldn't normally make a journal entry for this small of an amount, but we have to start where we ended last year. The second item was also a little bit unusual. So it's adjusting the payroll calculation for the payroll accrual at the end of the year. So most often, we end the year on December 31st. The payroll runs aren't always that clean. Typically, it's, the last Friday or the next Friday. So there is a number of days that may carry forward. So your first payroll in January may include some December days, et cetera. So this year was a little bit unusual because the cash was actually taken from OOC at the end of the year, just for the net pay, not the deductions. But the payroll provider held on to those funds and didn't distribute them to the employees at that date. It was something that we haven't actually seen before. It was really just a timing difference. So the calculation just had to be adjusted to reflect what truly was OOC's liability at the end of the year there and correct that. I wouldn't expect to see that going forward. It really just depends on how the payroll falls.
Jamie, I just wanted to say on that, every 11 years, there's going to be 27 pay periods in a year. So in 2026, there's going to be 27 pay periods. It pulled on a Wednesday, which was December 31st, and it paid out on Friday, January 2nd. So it was just a weird situation.
Yes.
I'll put it on my calendar for 11 years to remember that.
I was just going to say, well, the good news is we can talk about it again in 11 years and it'll be very familiar. That's funny. I didn't know that every 11 years. So yeah, it was certainly unusual. So usually it's not something that we'll see going forward. And it was just adjusting that balance there. And the last item was reclassifying a credit card payment that was made in December. That included an overpayment. So it was reclassifying that to a prepaid expense. So it's an expense that relates to a future period rather than putting an expense and increasing your net loss or for the current year. So just a little bit of some different unusual items. I know typically we don't have a lot of adjustments. So it was an odd sort of end of year circumstance. So these were all really related to December transactions, which we'll talk about when we get to our internal controls. So we didn't have any disagreements, no entries that we proposed that management was unwilling to make, or disagreements on any treatment of any of the balances. We didn't identify any circumstances that would prevent us from being able to issue a report. And at the conclusion of the audit, once it's accepted, we will have a management representation letter that management will sign attesting, that they provided everything we asked. There's nothing that was withheld, et cetera. Any questions on the required communications? Okay. So the audit report itself, so it's a combined audit. So the back schedules, I usually, when there's a combined audit, I usually start from the back forward. So the pages 22 through 25 of the draft contain combining schedules. So there'll be a column for OOC and a column for the foundation, and we'll see how those combine. And then that will then flow to the main combined financial statements that you'll see starting on page 8 through page 10. So those numbers include combined data. The audit report itself does start with the opinion that I mentioned. It is a clean opinion again, so that's what you want to see. The opinion itself changed a couple of years ago, where it clearly lays out responsibilities in the opinion. For those who may not be familiar with reading accounting speak or accounting language, the changes a couple of years ago made it a little bit more user friendly, I would say, to spell out what it is. Pages 4 through 7. Oh, sorry. Oh, sorry, I thought someone had a question. Pages 4 through 7 is the management's discussion and analysis. So I usually would recommend if you are short on time or if there's something you're looking for, the MD&A should really provide a shortened snapshot or high level overview of the financial statements themselves. It's a condensed version. And there is a new accounting standard that will be in effect next year that's actually going to restructure and change a little bit about how the information is presented within the MD&A and how they want to get a little bit more detail in there and have it be more useful to users. So we'll see that next year. The notes that I mentioned, pages 11 through 19, so those include all of the backup support, the accounting policies that support all of the numbers that are in the main financial statements themselves. And the functional expenses on page 20 and 21, those are the estimates that I mentioned on how we allocate the expenses between your overhead or your management in general and your program for your operations. And the last item is a report on internal control over financial reporting. So that is required for government auditing, and any findings that we may have would be reported within that report. Any significant deficiencies or material weaknesses, which we don't have this year. So that's a clean opinion as well. Any questions on the content itself? Okay.
So this slide that we put together shows you a nice snapshot of the changes in revenues and expenses for both OOC and then separately presented the foundation as well. As you can see, revenue increased for both of them, and in turn, the change in net position was also a favorable increase for both as well. I will go over some of the more significant impacts to that. I'm actually just going to discuss it a little bit more on the next slide where we have the individual line items. So I'll start with the foundation because there's a lot less going on in there. Like I said earlier, the fund drive generated $27,000 this year, about that. And it was an increase due to the emphasis placed on just collecting more donations and also larger contributions. And then that was a little bit offset. There was a National Grid reimbursement for some ad placement in 2024 that was about $6,000. So overall, that revenue increased about $10,000. The net difference of those two, and expenses, there's also really not a lot going on there, and it was really consistent with the prior year. We didn't see any big fluxes there. As far as OOC, on the revenue side, the largest increase was in that gain on property sale. That was the BEC building. There were a few land parcels sold in 2024, so overall that increased about $330,000. The grant income, the state and other grants, really that $75,000 from the IDA, their share of the renovation costs, that's in there, and that's the biggest piece of it. The other increase was the $10,000 small business grant recovery program. So that increased about $85,000. Your County of Oswego funds increased about $50,000 in line with the contract that was signed for 2025. And loan interest income also favorably increased by about $20,000. And that is just a function of the interest rates, especially I know that some will be, deferred, I believe, for about 5 years, but over the last few years, as the interest rates in those loan agreements have increased, you're now starting to see that impact, which is a really nice, little revenue source. And all of that offset by about a $40,000 decrease in your rent income, as it was mainly the Board of Elections that was not received in 2025. So overall, your revenues increased about $440,000 for OOC, which really leads to that positive change in net position. On the expense side, the payroll and employee benefits went up about $40,000. We expect to see increases in salaries pretty much every year, normal raises, and this was also the first full year of some staff's salaries that were in 2024, I believe. And Kevin, correct me if I'm wrong. You had one hire in 24 and one in 25. There was some at the end of the year, right? I don't remember the exact timing.
The 25 was the first year we had full employment for everybody. We didn't have any open positions or anything like that. So it wasn't necessarily related to increases, just not having open positions. Well,
yes, thank you. And then professional services went up about $20,000. Really, that strategic capacity planning project drove that, as well as a grant application, professional services for that. Development expenses related to the daycare building fluctuated. That really is based on need and, the any repairs, maintenance, things like that in the buildings that you own. Dues and subscriptions went up about $12,000 as well, related to your Civic Serve economic development platform, mainly there. So overall, expenses went up about $100,000, and I'm sorry, went down about $100,000. Nope. Sorry, scratch that. Went up about $100,000. Sorry, but it related to a decrease. It decreased your overall change in net position from that $440,000 increase in revenues, and that leads you to your $367,000 change in net position. Any question on revenues, expenses this year? If not, we can move on to our balance sheet items, assets and liabilities. So a few things that I just want to point out in here, because most everything else is really a function of what we just discussed. Loans receivable overall went down about $140,000. There was really that big change in your K&N balance on the books. So that had, at the end of 2024, had about $200,000 on your books, because there was like $400,000 in the loan, but it was reserved at 50%. So it was estimated that about 50% would not be collectible last year. So that's where that $200,000 was. And then that was assigned in 2025 to the IDA, back to the IDA. So that came off of OOC's books. And then payments received about $175,000 this year on the remaining loans, as well as 2 new loans were issued, totaling $250,000. So that's, we did end up receiving all of the confirmations back for the larger loans on the books. We had some difficulties with those smaller COVID loans, but those are now reserved at 100%. So they're actually net zero on your books. That reserve was adjusted this year, as well as a standard 2% reserve for all of the non-COVID loans that are on the books. That was management's assessment this year, and so that is included there. Property and equipment, we've discussed. The BEC building was sold. That had a net position, or a net book value of about $80,000, so that came off the books. And then the CIP, the office renovations that were in progress, those went on about $122,000. and depreciation, standard depreciation this year of about 50,000. So the actual overall change in your property and equipment net of depreciation was only about $9,000 decrease. Accounts payable, I mean, that really fluctuates, just timing of invoices received. This year, with all of the construction towards the end of the year of 2025, there was, I believe, one $20-ish thousand invoice that really increased your accounts payable. And then the debt obligations on your books is what you owe to the IDA, and that decreased based on payments of about $59,000 to the IDA, as well as the money owed back to the IDA for the K&N loan is now also not on your books. So really, that K&N loan coming off was a net zero effect to your net position because it came off of your assets and it came off of your liabilities. So they kind of self-balanced there. Any other questions on the kind of balance sheet side of things? All right, we can go ahead to the next. Oh, I'm so sorry, an alarm was going off. So we also have, other than all of the numbers in your financials, we also have some other annual financial requirements. We assess your investment policy every year. It's something that is required. You're in compliance, required by New York State Public Authorities law. Not really investing in the sense of the word that we would think about it really in our day-to-day lives, but we do look at the deposit balances in the bank and make sure that, you know, mainly you're collateralized. The IntraFi program has been very helpful in that. It kind of spreads your funds into different individual banks so that every bank is covered under that $250,000 FDIC limit, and no external collateral is needed at that point, which is, it's a really interesting program. It was really cool to read up on more this year. The Paris report, I know that many years ago, there was some difficulties getting that filed before March 31st, but Karen has worked so hard to make that timely, and it was timely filed for 2024 in 2025, and we don't expect any issues with 2025 being filed timely in 2026. Kudos to the office staff there. We also will file the IRS Form 990. Those are both in process. I believe the Foundation 990 at least is in the review stages at this point. And then the Chart 500 will also be completed by management. That is a change that was made a couple of years ago. That it's an online filing, and I think that Kevin knows the drill for that one, but we also will send instructions as well for that. Any questions on any of those items?
So just to touch on those 990s, as Bree mentioned, so they are due by May 15th with extensions available to November 15th. You are correct, Bree. I actually just reviewed the Foundation's 990 yesterday, so I will be able to send that draft out. And the OOC draft, I have time scheduled in the next week or two to be able to get that underway. I think, Kevin, you had said April 6th is what you were looking for timing. Is that right?
Yeah, ideally, we'd like to have them at the executive committee meeting and then authorized, at the board meeting in early May, so we can make that May 15th. The April exec meeting, and
that is our plan as well. Like I said, the foundation is all set. I will get that draft out to you today. And then the OOC 990 will be in process in the next week or two. I was able to schedule out some time there, and we should be able to make that by the 6th. So that's great. That wasn't a problem.
Thank you.
No problem. Absolutely. So, so for the internal control matters, you should have a separate draft copy of our management letter. So this management letter can spell out different levels of findings that we may have. It's like a 2-page report. So this letter will go through if we have any material weaknesses, significant deficiencies, or any non-compliance items noted. So those are in level of severity there, material weakness being the most significant, and then opportunities for internal control just being recommendations that we may have. So if you're familiar with the last couple of years, 4 years, well before my time, there had been segregation of duties, significant deficiency on the organization because of the small staffing size and the way controls and processes were set up. So it was Austin and Kevin's mission over the last couple of years to really redefine and strengthen those processes. So in 2024, I think it was the last quarter of 24, some new policies were put in place and a new process was adopted. And last year was the first year we were able to really remove that segregation of duty, significant deficiency, and we just had some small opportunities for strengthening it last year. So you'll see this year that that's gone completely. So it speaks volumes to the importance of controls and processes that you as a board oversee, and management's emphasis on sort of making sure that everything is happening above board and by the books. And I think that's great to see, and it's great to see the progress over the last few years specifically. The only items that we had this year is really just surrounding those year-end financial adjustments that we discussed for the entries that we had. When Bree went through the financial statements, really those changes that you heard, those are the financials that you saw really throughout the year. We didn't have any significant material adjustments. The information you're getting at your board meetings is accurate. Those changes are well, information you're already aware of. The atypical year-end adjustments that we had didn't impact your books and records enough for it to rise to any significant level, but there were enough of them that we just wanted to maybe think the next step is making sure year-end accruals have their own layer of oversight and review. So throughout the year process has really tightened up, and so the next level would be at the end of the year. I know Kevin is really deep into the books and records, making all those year-end adjustments and accruals. So adding a secondary layer of oversight to those would be sort of the next step to close all the loops there. So those entries were a little bit unusual, not something that we would expect to repeat, but maybe next year there'll be some new circumstances that we're unaware of. So maybe creating a year-end close process may prevent those.
Hey, Jimmy.
Any questions on that? Yeah.
Hey, Jimmy, it's Ron Tescarl. I just have a question on each of those. Just so I was reading the opinion letter, and I think it's just terminology. Maybe it talks about that the internal control was for a limited purpose, but here we state there's no material weakness, no significant deficiencies. So does that we tested all the internal controls and there's no material weakness? I just wanted to make sure I connected with what I kind of read in the opinion letter when I said
Yeah. So it's in a governmental audit, we are required to test controls and evaluate the key controls there, which we do, and we didn't have any specific findings related to the controls in place outside of, and I wouldn't even say these are controlled. These are more of a substantive year-end type procedures. Just adding a layer of oversight would prevent, any significant adjustments there. But yes, we do evaluate controls.
And then just on the year-end financial adjustments, do certainly we present quarterly financials to the board. All those seem like very unique year-end items. Was there anything that would be material, you think, to any of the quarterly financials that get presented? I feel like
No, the voided check would have been there from whatever point Kevin voided it going backwards. But it was literally $1,500. That was just a required entry to roll the fund balance there. So that was $1,500. I don't think it was material. The payroll accrual was right at year end. And then the insurance, I think the credit card invoice, I think it was mid-December. So I guess that could play a component in your quarterlies, because I imagine you must pay it every mid-month there, depending on the volume of transactions in any given period.
And that was a function of the timing of the credit card bill coming in. Karen made a payment to avoid any possibility of late fees because the bill was not received yet. And then that payment wasn't applied to the next bill. It was just this weird timing situation, and the entire payment was expensed in one chunk. And it was not categorized out because the bill was not available yet. Once that bill came in, we just assisted with reclassifying into the proper categories and decreasing the expense by the portion that was overpaid. So honestly, the impact to what you guys were provided during the year, it's a reduction of the expense actually. So kind of more conservative, but it wasn't that payment was not recorded. It just was not categorized.
And not material. So no material entries that would affect your quarterly financials.
Yeah, that's kind of what I was. Thanks. Great.
Yeah.
Jamie, if I could ask, this is Rick Weber. You had mentioned conceivably implementing what would essentially be another layer of end of year review, if I'm understanding this correctly. Would that be an external or an internal review?
So it would depend on your capacity internally. So if Kevin is making the year-end adjustments, it would perhaps either be a function of Austin or at the board level, maybe your treasurer function, reviewing some of those year-end accruals or that are specific to year end. So your payroll probably is only getting booked here and your accrued vacation, some of those specific year end items that get adjusted. It's maybe creating a checklist of having those items be reviewed or worked through. I know Austin and Kevin look at the journal entries on a month to month. So maybe it's, sitting down and reviewing those and does that make sense? Or maybe it's doing that with the audit committee. It may look different depending on, what your capacity is. I wouldn't think it needs to be external though.
Okay, thank you.
I do want to share one thing. I mean, these are issues that were both, two of the three were identified in December when we have an end of year audit as of January 1. You guys are in here the second week of January. There's not a lot of time to reconcile. I'm just saying, we've as part of the ability for us to get this done by March 31st is we've really accelerated our schedule. Usually we used to have you guys that come in like late January, early February. We've moved it up to literally the second week of January. So as part of that, it has sort of sped things up on our end. I will say these are two of those three things I think are very unique. The one, was a once every 11-year issue that we now know about. The other one I think was specifically probably related to us with the office renovations going on, kind of working remotely and just creating some issues there. So I wouldn't say, and I think that we had in our management response related to this. I think we're going to address some things to look at it, but I would not call these things that, at least in my opinion, things that are an occurring issue, I guess. I think it was related to us not having a chance to really get in and look at that and make any corrections before literally the second week of January when auditors came in.
No,
Sure.
Austin, I do think closing the books in 1 week speaks to the quality of the people in the process. So we have.
Yeah, exactly.
Not only that, but closing the books in a week and having, these are very small items too. And we certainly
I want to say Kevin in particular, Kevin, but and I know we're getting recorded, but Kevin's busted his ass to get these things done in time. So
yeah,
pardon my French.
We can bleep that out.
I don't know how to make my clapping stop.
If there's no other questions, this would typically be the point that we would, ask to speak to the committee privately just to discuss our normal conversation without management present. Is that something we're able to do with the recording?
Jamie, they said they were going to pause it and go into
Okay.
executive session for us.
Okay.
Yeah, you would have to, the committee would have to take action to enter executive session, and they would have to, we do not have our legal counsel here, but I know enough about the reasons that we can go into executive session to talk about the financial history of a certain individual corporation.
So we need a motion to enter executive session.
Yes, I would make that motion.
Okay, we got Ed. We need a second. Oh, Ellen's a second. So Nate will stop recording, but you guys will still be on. And then we'll ask all the staff to exit.
Yep.
we'll have a conversation and then we'll come get Nate to
Turn it back on.
reinitiate when we exit executive session.
Okay.
A well-oiled machine.
Okay, so
I'll make a motion to come out of executive session.
need a second? Alan, we got, all right.
Aye.
Yes, all in favor?
Aye.
So at this point, we simply need a recommendation by the board. I think we need to forward for the full board. The results of the audit.
Yeah, recommendation.
I move that recommendation.
I'll second it.
Any discussion? All in favor?
Aye.
Aye.
Looks like we got unanimous. Okay. Thank you.
I think we're good. Thank you.
Great. We will see you on Monday.
Yeah.
Have a good
Thank
weekend,
you.
everyone.
Thanks,
Thank
guys.
you.
Have a good weekend.
Bye.
Bye.
We need the next meeting date.
Probably around this time next year.
Is this,
Lesser than the meet center.
was it useful to have this meeting like on Friday before Monday board meeting, but also tried in the past to do it immediately before.
Yeah, that was the other option. Is maybe go at like 2:30 instead of 3, have them meet 2:30 the same day as the board meeting. But
Well, I got, and this is me simply being selfish. We had a time to fill the gap in case questions come up. Under kind of uncertain. I hate the immediacy of that.
Right. This is still pretty immediate meeting on Monday.
And I'm looking forward to that.
clean audit and everything. You don't need that. So what that it's not.
And you can't anticipate that.
Right.
I don't think we should anticipate that because I hate to feel that anybody's pushed through or running.
So what we could do is get this meeting. And I know it kind of came up for some people attending now and different things we can get the meeting now, planning to audit. Anything else.
Yeah, we
We can do better at that. Let's see.
Out on calendar for September and get what, I mean, we're closer to the end of the year.
We sit down with the auditors and to plan these dates, so that would be a good time.
Yeah. Yeah, we got them on board.
Following it.
So,
Plan.
It's a little hard to hear, just it's muffled.
It is. Yeah, you guys are a bit garbled. We're catching like every other word.
Right. Plus
But
you're
if
still
you-
recording.
If you're talking dates, I actually think today works great. I'd rather do it before the board meeting. I just if I put it on my calendar ahead of time, I can always book around it. It just happened I booked something a month ago. Then I really
But if we get that set in November,
it's just kind of my fault on that.
works. We can set. But it's. And then. Date.
So, and I'm not sure where, but normally Kevin's going to be sitting down with them so in the November timeframe. So once he sits down with them, he can project out a date in or if that's enough time.
Yeah, no, that's
And I particularly asked that it be at least a week before the board meeting. Just so everybody, I hate rushing everybody into a meeting right before the board meeting to go over this in case there are questions that need resolution.
yeah.
So at least it would give us some time.
That's fair.
Monday previous or something like that to the board meeting. Monday or Friday before that.
Well, it's only gonna get smoother.
I think that is in their time frame. They would like doing that, but it is, we can make it happen.
Yeah.
Okay, so it's still TBD, but somewhere around November. Let us know what it is,
Okay.
when the next meeting will be. We'll have up in the interim, and we'll just back together if need be for something, right? So,
All right.
That's great.
anybody have any other business for this committee?
Nope.
Karen?
As long as you all are happy, I'm happy. We're good.
All right, so we need a motion to adjourn.
So moved.
Okay. Do we need to vote on that? I never.
Yeah,
All in favor?
We can. Sure.
yeah.